Investors brace as turmoil grips the stock market. In today's cover story, how the little office supply company that could is beating big competition. Plus, why flying first class may soon be within reach for more passengers. And a trader who is fired up about his version of good old Texas barbecue. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, everybody. I'm Angela Miles. It's Monday, December 15th. In our first look, the Dow's dive selling accelerated Friday on Wall Street with the blue chips going deeper into the red. The day closed with a 315-point loss for the Dow. The Nasdaq took a 54-point beating, and the S&P 500 slammed by a 33-point drop. Gold fell $4 and oil slipped below $58. JP Morgan analysts believe better days are ahead for the stock market. They predict the S&P is on its way to 2,250 next year. That projection is based on past performance of the economy. And today is deadline day for open enrollment of Obamacare. Well, traders will be on their toes for today's market action. James O'Malley of Option Hacker joins us. Good morning, James.
Good morning.
The CBOE VIX spiked last week, indicating that traders are feeling anxious about this market. Will the VIX continue to rise?
Right, so I think that we will continue to see upside moves in the VIX. I think the market is starting to look very weak here going into the end of the year. We're not seeing the Santa Claus rally that we might normally expect. And actually, after Friday's close, we saw S&P futures sell off significantly in the after-hour session, which would have pushed the VIX even higher if the market had stayed open. So it looks like bearishness is starting to build, and at the very least, traders coming in and looking for protection amid all this uncertainty should drive implied volatility higher and then therefore drive the VIX higher.
What will that mean for average investors?
So it might mean some choppy markets into the end of the year here. We don't really have too much more macro data, although we do have the FOMC meeting this week. I don't expect that to cause a whole lot of movement one way or the other. So it can be a little bit difficult for investors to find positions that are going to present good risk versus reward opportunities, because the lower the price of oil goes, the more pressure is going to be on the energy sector, which makes up a big part of the S&P, and it can create some volatility into the end of the year.
GoPro was an active trade last week. What's the picture look like for this week?
Right, so we saw some very bearish, unusual options activity in weekly options that expired last Friday in GoPro, which is what got me involved in a large short position that I took off on Thursday going into the close. Now, what's interesting is that the stock got an upgrade from JP Morgan on Friday and looked like it was going to gap open into Friday's open. But sellers came in and took profits right away in that one, and it closed higher on the day, but gave back most of its gains. Action like that, when we see a big move higher on an upgrade and sellers coming in, tells me that the stock should be heading lower throughout the next week here.
Thank you for coming on the show.
Good to be here.
Time now to bring in Chuck Coppola, who has the backstory on why some gas stations are slow to lower prices as oil falls fast.
That's right, Angie. Crude is falling dramatically, yet gas stations are pulling in bigger margins. That's because station owners buy gas on the wholesale market and sometimes lose money when crude rises quickly because they can't raise prices as fast as their costs are going up. So when oil dips, station owners wait to drop prices, enjoying some higher margins temporarily.
It's almost a definite that gas prices are going to drop another 20 cents per gallon unless something significant happens, just because wholesale prices have already dropped to that level. Retail owners of gas stations, they use this period as a way to profit. They're making big bucks right now.
The difference between wholesale and retail prices reached more than 21 cents a gallon this year. That's the highest ever. Retail gas prices are now averaging $2.60 a gallon, the lowest since 2009. That's a savings of $100 per household that will likely result in more spending on gifts and more travel over the holidays. Crude oil last closed at $57.75 a barrel, down more than $20 in the past month.
Chuck, it's been a tough year for travelers to land great deals on airfare, but if oil prices continue to fall, Sarah Gavin of Expedia predicts the trickle down will mean lower airline prices next year, even for first class.
One of the big trends next year is the fact that the gap in price between flying first class or business class and flying economy or coach is really starting to shrink. So this may be the year that you say, you know what? This holiday was too hard. Next year, we're flying first class, and that may be a lot more attainable. The other thing that we're seeing next year is that we're seeing increased demand really met by increased capacity. And those two things are canceling each other out. You combine that with the fact that that fuel prices are decreasing, and that means that airlines can be a lot more competitive to be able to win our business.
Gavin adds that airline ticket prices will be lower to flat next year.
If you wanted to get there, you could rely on reindeer, as one large man in a red suit has done for generations, or you could call FedEx, and it seems a lot of people are doing the latter. FedEx predicts today will be its busiest in company history. A record 22.6 million packages are expected to ship. That's double what it moves on any given day, much of it driven by the rising amount of e-commerce. Internet marketing company Comscore predicts web sales will rise 16% during the holidays to $61 billion, and that purchases made using mobile devices will increase 25% from last year.
Ford and Kim Kardashian have something in common: the love for BlackBerry. The car company is ditching Microsoft's in-car technology and using BlackBerry QNX instead. Reports say the dashboard touchscreen using Microsoft software was becoming a source of frustration for drivers. According to J.D. Power, it put a dent in Ford's customer satisfaction quality rating. A survey by Ford shows the automaker is turning the corner on customer complaints, and the new BlackBerry system is expected to put the company on a better track.
China's top search engine and internet service provider Baidu is working on an Uber deal. Baidu plans to invest $600 million into Uber. Uber's been under pressure. It was sued by the district attorneys of Los Angeles and San Francisco over claims that it makes false assurances about drivers' background checks. Spain banned the service, and Rio de Janeiro declared the service illegal, and the Netherlands halted its ride-sharing service. Shares in Baidu were up slightly at $229.20.
The person who owned your home before you did may be to blame for fees hidden in your insurance plan. Laura Adams of InsuranceQuotes.com is here to explain. Good morning, Laura.
Thanks for having me.
What's going on here?
There is something called a CLUE report. This is Comprehensive Loss Underwriting Exchange, and this is a database that tracks your insurance claims for both auto and home. Now, it goes back for 5 years, and even in some cases up to 7 years. So if somebody who owned your home before you made claims, those can be used by an insurance company when setting your rate.
What can consumers do?
The main thing that consumers should do is really check their CLUE reports. They need to understand what's in it, have any errors corrected right away so it can't influence your rate. And most importantly, if you're buying a home, make sure that you request a copy of the CLUE report from the seller so you understand what claims have been made on that home before you buy it.
I love that tip. Thank you, Laura.
In our cover story, increased speculation that Staples and Office Depot may merge is music to the ears of Garvey's office products. That's a family-owned Chicago area-based company that competes with big box rivals by being more responsive to customer needs. Garvey's Office Products, a $40 million a year family business with 85 employees and 3,500 customers, cannot wait for Office Depot and Staples to merge. Speculation that also drove up shares of Staples 2.3% to $16.47 in the most recent trading session.
Every time they're trying to integrate these different big companies, the service levels to the end user are disrupted.
Garvey's, a Chicago area business with a high amount of YouTube savvy, increased its business 7% this year. Its strategy: undercut Staples and Office Depot pricing to get new customers, then provide more service to keep them.
We never get new customers unless we're showing them savings. That's initially the thing that gets them on board.
One secret, he says: stay ahead of the market. Garvey's bundles break room supplies and is looking to acquire other revenue streams, such as coffee and janitorial service, to create a one-stop shop.
It's important because the traditional office products category is really kind of a shrinking. They're scanning and digitizing all these things. So if we were to not add new categories, our sales are going to plateau.
It also helps businesses recycle, picking up and disposing of computer equipment and cases of spent toner cartridges for free, then donating to charity the residual value. $160,000 donated to charities over the last 6 years. Garvey says in Chicago, Staples still controls about 40% of the market, and Office Depot a lot of government contracts. But Garvey's hardly suffering. Revenue from new office furniture this year doubled from the year before. He calls it an indicator of a revived business climate.
6 companies are expected to debut stock this week. Last week, Lending Club had a blockbuster opening. The stock rallied more than 50% in its IPO Thursday and added another 6% on Friday. Wells Fargo is claiming victory. The bank was one of the earliest investors in Lending Club. Software firm New Relic was also a standout IPO last week. That stock shot up almost 50% in its first trading day on Friday. Another name in the software sector, Hortonworks shares spiked up more than 20% in its debut.
The chasm is growing between racial groups when it comes to money. A Pew Research Center study reports that the wealth of white households was 13 times greater than those of black households in 2013. It was 8 times in 2010. The gap is now the largest it's been in 24 years. Hispanics are not faring much better. The wealth of white households was more than 10 times that of Hispanic households, up slightly from 3 years earlier, and the biggest since 2001.
It's the gift that keeps on giving. We're talking about that sweater or bottle of wine you got as a present and gave to someone else. The re-gifting trend is growing among the wealthy. American Express says 42% of Americans with annual household incomes of at least $100,000 have re-gifted in the past year. That is up 10% from last year, and 76% of them say it's okay to do, up 3% from 2013.
Vinyl records are spitting new sales records. Nearly 8 million vinyl LPs have been sold this year. That's up 49% from the same period last year. However, as new vinyl hits new levels of use, only about 15 companies still make turntables. Vinyl enthusiasts are optimistic, though, that the records will catch on again and prompt manufacturers to turn it up.
Turning to the economic calendar for today, it's industrial production and capacity utilization for November, the NAHB Housing Market Index, and tick flows. On the earnings calendar, watch for Verifone Systems. Still to come, the surprising tie between student vacations and the stock market. Plus, market watchers offer their sector picks for the coming year, and a trader who hopes to cluck his way to the bank.
Students get ready for a break from classes. Investors should prepare for a break from stock gains. New MIT study found stock market returns averaged about 1% lower in the month after a major school holiday. After traders have been unplugged for a while on the beach or the slopes with their kids, they quickly catch up on bad news that they missed. That info gets incorporated into stock prices.
Now onto the story of a trader who is pecking away at making a profit with a tasty business he believes will take flight. Viewers across America have become used to the antics of trader Alan Nuckman as a popular guest on our Traders Unplugged segments.
You know what? You should be wearing a cheerleading outfit because
I like chicken.
Behind the scenes, when Alan is not trading and keeping his eyes on the options market, he's flipping birds on a barbecue. Alan is the master chef behind Original's Chicken Ribs.
I took a pork rub recipe and put it on a special cut of chicken to develop some healthy barbecue, and it's fantastic. And I realized that there's a place for this in the marketplace. Frozen, just heat it up in the oven, and you've got barbecue ready to go.
Taking it to the streets, Alan is drumming up one finger-licking fan at a time.
What do you think, Ray? I like it.
So how did Alan make the connection between trading and this plucky idea?
Well, I recognized the opportunity by going to the National Chicken Convention, believe it or not. I went to check out hedging of corn prices, and I realized there's a need for other chicken products, and especially this special cut of chicken that I make.
With corn prices under pressure, it's costing farmers less to feed chickens, and industry watchers say consumers are steering away from beef. But will they choose chicken ribs?
I don't know how widespread it's going to be accepted. They're absolutely, in the last year, we've had this huge run-up in both cattle and hog prices. Some of it health-related, particularly in the hog side of it.
And healthy-minded consumers are what Alan is after. It's just that getting chicken ribs into the mass market is not that easy. He says there are challenges with government regulations and trying to get into stores such as Whole Foods. Until that happens, Trader Alan plans to concentrate on trading and wait for his poultry profit. Alan tells us the next step is to raise money for his chicken ribs through Kickstarter. Coming up, a farewell to a prominent fathead, plus a trader who's ready to reassure you about the stock market. First Business will be right back. president, who's a fan of low interest rates as a way to stimulate the economy, is making plans to say farewell to the Federal Reserve. Narayana Kocherlakota, president of the Minneapolis Fed, will step down when his current term ends February 29, 2016. He's been a Fed head since 2009. As a voting member, he recently argued against ending the central bank's bond buying program. Small investors and big money managers are fretting over when the Fed will raise interest rates. Bill Mueller joins me now with the inside scoop on stock picking.
Hey, you want to be a better investor? You know, one able to determine which mutual funds, stocks, and other products work best for you? Well, for a week, Morningstar, the investment research and management firm, has been running a special report. It's called The Guide to Better Investing Picking. Christine Benz is Morningstar's Director of Personal Finance, and my gosh, it can be daunting. You have hundreds upon hundreds of just mutual funds, not to mention stocks and other products, to choose from.
Sometimes people run into analysis paralysis because there are just too many choices. It's tempting to just do nothing because you have no idea where to start. So it's a problem.
Well, let's start.
Okay.
What are the investing picking basics?
The first step in my mind is that you want to do a little bit of introspection. Think about how much time you have to devote to this. Think about your knowledge level. If the answers are very little, I think it makes a lot of sense to just focus on investments that will give you a lot of diversification in a single shot. So here I'm thinking mainly about broad market index funds. They're very low cost. They track a whole market segment in a single investment. That can be a great place to start.
How about not being too unsophisticated in terms of how broad you're buying? A lot of people, their company gives them incentives and discounts if they buy the company stock, and you can make a lot of money that way, but you can sure get hurt too.
You want to be very careful with those heavily concentrated positions. I heard someone say that this is one of the best ways to make money. So when you think about some of the really wealthy people you know, they have made their money by owning their own company or owning a lot of a company's stock. It's also one of the best ways to lose money. So you want to be very careful, especially with company stock, because you have a lot of your economic wherewithal tied up with your employer. If you lose your job and your company's stock is sinking at the same time, that's a lot of things going in the wrong direction at the same time.
All right, Christine, you talked about the introspection. Now you look at that wall of opportunity, all the different possible things you can own. How do you pick and choose there?
Keep it broad, keep it well diversified. Also watch your costs at every step of the way. We often evangelize about the importance of watching fund costs. If you're buying a mutual fund, keep the costs as low as they can possibly be. If you're a stock trader, certainly watch those commissions, even though they've come down quite a bit over the past several years. If you're trading a lot, that can cut into your take-home return. Tax costs can also eat into your take-home return. So watch where you're housing your various asset types. Make sure that you're taking advantage of any tax-sheltered wrappers that you have available.
And they can read about all of this at what, Morningstar.com?
Morningstar.com.
Christine Benz, thanks so much.
Thank you, Bill.
Just ahead, anxiety is rising on Wall Street. How to remain calm after the break.
You're watching First Business, your source for financial news, analysis, and today's investment ideas. Coming to you daily from Chicago, the financial heartland of America, First Business offers a preview of the day's market action, trends in money, and timely consumer news. Don't be left behind. Get your daily dose of the leading financial news stories every morning. It's your money. Watch where it goes. Watch First Business.
Fred Banyan of American Trust Investment Services joins us now. Fred, you have to be our calm in the storm today. A lot of people are timid about this market. What would be your strategy?
I think they should just stay the course. This is probably going to be a short-term hiccup in the market, and 2 or 3 months down the line, I think that we'll be okay.
What sectors do you like in this market? What sectors would you actually buy, even in the current environment?
Well, you know, I actually like technology right here. I think they're going through a new cycle of upgrading and whatnot. I like actually the oil stocks. I think many of the larger, well-capitalized stocks will continue to pay dividends, and eventually oil will calm down.
Really, what names in oil would you buy at these levels?
Right now in our office, we're looking at Exxon, BP, Amoco, Halliburton. we like Chevron.
Well, thank you, Fred, for coming on our show. Have a good day.
Thank you very much.
And from all of us, have a great start to your week.